Welcome to Managerial Accounting, Chapter 7, Activity-Based Costing. For this chapter, we only have 6 learning objectives, so let's get started with Learning Objective 1, Develop and use departmental overhead rates to allocate indirect costs. Let's start this with a reminder about Chapter 5 and how we calculate the predetermined manufacturing overhead rate. Remember, we need to allocate manufacturing overhead to the product or service because these costs are indirect, meaning they are difficult or impossible to trace directly to the product or service. We start by estimating the total manufacturing overhead costs for the year. We then decide on the allocation base, also called the cost driver. It has to be something that causes the manufacturing overhead costs to change and has a very close relationship to those costs. So what does that mean? If we did a regression analysis, we would see that there was a high R-squared value, meaning that the change in the independent variable causes a change in the dependent variable. Once we decide on the cost driver, we then estimate the total cost driver for the year. We use these estimates to calculate the predetermined manufacturing overhead rate. In order to allocate or apply overhead to each job, we take the actual driver for that job and multiply it by the predetermined manufacturing overhead rate. That's the amount of overhead we'll allocate to that job. We use the same predetermined manufacturing overhead rate for the whole period. Let's do a quick example to remind you how this is done. ABC Inc. estimates that their manufacturing overhead will be $800,000 for the upcoming year. They determined that direct labor costs are the best cost driver because when labor costs change, the manufacturing overhead costs also change. They estimate that total direct labor costs will be $520,000 next year. What is their predetermined manufacturing overhead rate? The predetermined manufacturing overhead rate for the period would be $800,000 divided by $520,000, which is equal to 65%. That's 65% of direct labor costs. To allocate the overhead to any job, management will take the predetermined manufacturing overhead rate and multiply it by the actual direct labor costs incurred on that job. Let's assume that job 622 has the following available information to date. Direct materials is $28,480. Direct labor is $11,400. What is the total cost of job 622? First, we would have to calculate the amount of manufacturing overhead to allocate to job 622, which would be the predetermined manufacturing overhead rate multiplied by the actual direct labor costs. We know that the actual direct labor costs are $11,400. So using that information in our formula, as well as the predetermined manufacturing overhead rate of 65% of direct labor costs, the amount of MOH to allocate to job 622 would be $11,400 multiplied by 65%, which is $7,410. The total cost of job 622 is therefore $28,480 plus $11,400 plus $7,410, which is a total of $47,290. This method of allocating manufacturing overhead using the predetermined manufacturing overhead rate seems straightforward and basically perfect. So what's the problem? The problem is that one predetermined manufacturing overhead rate may distort the cost of the product or service. Why? Because one driver does not reflect all of the costs in the cost pool, in the manufacturing overhead cost pool. Let's look at an example. Going back to ABC Inc., note that they produce croissants and they make them in 3 different departments: mixing, baking, and packaging. Mixing is staffed by the company's very talented bakers who are all very well paid. The mixing process is very labor intensive and, although they use some machinery, the bulk of the work is completed by their own world-class bakers. Management feels that direct labor costs is the cost driver that best represents the change in manufacturing overhead costs for the mixing department. However, the baking department is very automated with only 1 worker for every 8 industrial ovens. This department uses a lot of machine hours, but very few workers. Management therefore feel that the best cost driver for the baking department is machine hours. Packaging is very labor intensive, but unlike the mixing department, all of the employees are paid minimum wage. Therefore, management believes that the best cost driver is direct labor hours. We know that when ABC Inc. uses only one predetermined manufacturing overhead rate, they use direct labor costs. You can now see why that's a problem. By using only direct labor costs as the allocation base for the single predetermined manufacturing overhead rate, the company is misallocating manufacturing overhead in the baking and the packaging department because their drivers should not be direct labor costs. Why not? Because they don't cause the manufacturing overhead costs in those departments to change. There's not a close relationship, not a high R-squared value if we did regression analysis. By using only one predetermined manufacturing overhead rate, management may end up either over or under costing all of their products and services. So, what can we do to overcome this disadvantage? We can divide manufacturing overhead into multiple cost pools, one for each department. It does not change the total manufacturing overhead costs. It just divides that one pool into departmental pools. We can then calculate a predetermined overhead rate for each department using different cost drivers for each one. By doing so, we'll reduce cost distortion because we are choosing different cost drivers, the cost drivers that are appropriate for each individual department. By having multiple predetermined manufacturing overhead rates, we can better allocate indirect costs to products and services. So, when should we use departmental rates? When each department has different amounts and types of manufacturing overhead, or different jobs or products use departmental resources differently. When to use departmental rates is very important to understand. That's because if ABC's production process was all automated and every single department had limited workers and a lot of machinery, it wouldn't be necessary to calculate 3 different rates since machine hours drives all manufacturing overhead costs in every single department. We should only use departmental rates when departments incur different amounts and types of manufacturing overhead, or different jobs or products use the departmental resources to a different extent. Companies should only refine their manufacturing overhead cost allocation system if it leads to a better understanding of cost drivers. It leads to better decision making through the use of better product costing estimates. They should refine their manufacturing cost allocation system when a single system, like one predetermined manufacturing overhead rate, causes cost distortions. Note that all companies, including manufacturing, service, or governmental agencies, can benefit from refining their cost allocation system. Signs that may indicate departmental rates should be implemented include managers who don't understand the costs and profit in their department, or that the cost system is outdated. Let's go back to our original example of ABC Inc. We know that if they're using one predetermined manufacturing overhead rate, they use 65% of direct labor costs. That results in $7,410 of manufacturing overhead being allocated to job 622, and the total cost of the job would be $47,290. But management has decided to split the total MOH into 3 departments: mixing, baking, and packaging. Management estimates the following. The mixing department's MOH is $200,000 and their direct labor costs are $307,692 estimated. The baking department's MOH is estimated at $360,000 and their machine hours $9,000. And the packaging department's MOH is estimated at $240,000 and their direct labor hours $16,000. management also has the following information. The mixing department has actual direct labor costs of $8,550 of the total $11,400 of direct labor costs. The baking department has used 9 machine hours and the packaging department has used 3 direct labor hours. How much manufacturing overhead would be allocated to job 622 if departmental rates were used? What would be the total cost of job 622? Let's flip to Excel to calculate this. Here we can see ABC job 622. We have the direct materials at $28,480 and the direct labor at $11,400, and we're looking to find the manufacturing overhead allocated. We have all the same information as the slide: the mixing, the baking, the packaging, the estimated MOH, the driver, and the total estimated driver for the year. For job 622, we have all the actuals. So A says determine the departmental overhead rates. We know how to do this. The formula is that the predetermined manufacturing overhead rates are equal to the estimated total manufacturing overhead in dollars divided by the estimated total cost driver. If we divide these two, it will calculate the MOH rates for each department. So let's do it. For mixing, we're going to take $200,000 and divide it by 307,692. 65%. That's per direct labor cost. For baking, 360,000 divided by the 9,000 machine hours, it's $40 per machine hour. And then finally for packaging, we're going to take the $240,000 and divide it by the 16,000 direct labor hours, and that is $15. Let's just change that to a dollar. $15 per direct labor hour. So we have all the rates. A, done, tick. B, allocate the MOH to job 622. We know how to allocate. We know the allocated MOH is equal to the predetermined manufacturing overhead rate multiplied by the actual driver consumed in the job. So we're going to do that. We know that the actual driver here is 8,550. It is 9 machine hours and it is 3 direct labor hours. And this is coming out as dollars, but we're going to change these just to being numbers. There we go. So to calculate the MOH to allocate to this job, we're going to take the actuals and we're going to multiply it by the rates that we calculated. 8,550 multiplied by 65%, 5,557.51 cents. 9 machine hours multiplied by $40, that's $360. 3 direct labor hours multiplied by $15 per direct labor hour, that's $45. We're going to change this into dollars also. Add those 3 together. The total MOH that will be allocated to job 622 using departmental rates is $5,962.51. The total cost of job 622 is as follows if a single predetermined overhead rate is used with an allocation base of direct labor costs. We already know that because we calculated it. So now we want to compare it to what happens when we use departmental rates. Let's do a line there. So when we use departmental rates, we can see that the total cost is $45,843. The total cost under the one predetermined rate is $47,290. What's that difference? That's a difference of $1,447. So we're comparing between the departmental rates and the one predetermined overhead rate. Did the use of one predetermined overhead rate cause over or under costing? It appears that it caused over costing. Our product is now costed at too high a rate because we're allocating too much MOH to this job. Which cost is a better estimate of the total cost of job 622? Explain why. Well, we believe that the departmental rates provide a better allocation of MOH. Why? Because we are using specific cost drivers for each department. We're doing that because these drivers cause the costs within that department, the MOH costs within that department, to change. Using one cost driver does not reflect all of the costs in the cost pool when we add all the costs together. So by customizing the driver to actually match the dependent variable, the manufacturing overhead costs, we get better allocation rates, and as a consequence, we get better allocation of MOH. And that's why we believe that the cost under departmental rates is a better estimation of what it actually cost to produce this job. Remember, departmental MOH rates should only be used when 1. Different departments incur different amounts and types of manufacturing overhead, and 2. Different jobs or products use the departments to a different extent. Note the steps to use departmental rates are pretty well identical to those for a single predetermined overhead rate. Step 1 is to determine total MOH costs by department. Remember, the total estimated MOH will not change. We simply divide it into different departments, but the total is still the same. Step 2, determine a cost driver for each department and the estimated total usage for each driver. Step 3 is to calculate the predetermined MOH rate for each department. And step 4 is to allocate costs to individual jobs using departmental MOH rates. Notice the similarities to the steps we covered in Chapter 5 for calculating the predetermined overhead rate when we use a single rate. There is really no change except we do it multiple times. Let's move on to Learning Objective 2, Develop and Use Activity-Based Costing, ABC, to allocate indirect costs. We know that we should use departmental manufacturing overhead rates when 1. Different departments incur different amounts and types of manufacturing overhead, and 2. Different jobs or products use the departments to a different extent. But even though departmental rates can provide better product costing than a single predetermined manufacturing overhead rate, they may not be the best option. Why not? Because manufacturing overhead is made up of a lot of different costs. MOH includes fixed costs such as depreciation, insurance, property taxes, rent, etc. And variable costs such as production supplies, utilities, and wages for material handlers. Finally, there might be mixed costs such as machine repairs and internet usage. Remember that management has to decide on the allocation base, the cost driver, and it must be one that causes the MOH costs to change. There must be a relationship between the cost driver and the changes in the manufacturing overhead total costs. However, even when we divide overhead costs into departments, one cost driver may not cause all of the many different costs in that department's overhead to change. So what other option is there? And that's activity-based costing. We can split it into manufacturing activities. We can look at the manufacturing process and determine what activities make up that process. We can then split the total MOH between all of the activities. Like the departmental rates, under activity-based costing, we calculate a separate predetermined manufacturing overhead rate, one for each activity. Let's use Excel to continue our example with ABC Inc. ABC Inc. has job 622 with the following information. Direct materials is $28,480. Direct labor, $11,400. But what we want to do is calculate the manufacturing overhead we're going to allocate to determine the total cost of job 622. Management estimates the following with regards to the manufacturing activities involved in producing their product. So they say the manufacturing process is made up of these activities: machine setup, preparation, forming, finishing, packaging. Management has taken the $800,000 in total MOH estimated, and they've divided it into these 5 activity cost pools. They've then chosen a cost driver for each of these activities. And they've also determined the total estimated allocation base, the total estimated cost driver for each activity. So machine setup, $100,000, number of machine setups, and per year there's 2,500 machine setups. Preparation, $170,000 in the cost pool. Number of baking sheets is the driver, and the total baking sheets for the year is 10,625. Forming, we have $270,000 in that cost pool estimated. Direct labor hours is the base, and we have 13,500 direct labor hours for the year. Finishing is $140,000. We're going to use machine hours as the cost driver, and 4,375 machine hours per year is estimated. Finally, packaging is $120,000 in the cost pool. Number of jobs is the cost driver, and there's 1,500 jobs per year. For job 622, we have the following actual information. Machine setups required was 6 setups. Number of baking sheets, 200 baking sheets. Direct labor hours, 14 direct labor hours. Machine hours was 9 machine hours, and number of jobs was 1 job. A, determine the overhead rates for each activity. So we already know how to do this. I'm going to steal that formula from the previous spreadsheets. Let's just copy it, and we're going to paste it in here. We are not doing anything different. We're still using the same method. We're just doing it multiple times. So if I want to know the rate for machine setup, I'm going to take the 100,000 and I'm going to divide it by the 2,500 number of machine setups. That's $40 per machine setup. For preparation, I'm going to take the 170,000, I'm going to divide it by the 10,625 baking sheets. That's $16 per baking sheet. For the forming, I'm going to take the 270,000 and divide it by the 13,500 direct labor hours. That's $20 per direct labor hour. For finishing, I'm going to take the 140,000 divided by the 4,375 machine hours, and that is going to be $32 per machine hour. And finally, for the packaging, I'm going to take the 120,000, I'm going to divide it by the 1,500 jobs. That is $80 per job. Awesome. So we've got all the overhead rates. Allocate the MOH to job 622 using the activity-based costing. So I'm going to use the actuals because that's how we determine how much MOH to allocate. So we know that the actuals are 6 setups, 200 baking sheets, 14 direct labor hours, 9 machine hours, and 1 job. So I'm going to take those actuals and I'm going to multiply it by the rates. 40 multiplied by 6, 240. 16 multiplied by 200 baking sheets, 3,200. 20 multiplied by the direct labor hours, 14, $280. 32 multiplied by the machine hours of 9, $288. And $80 per job multiplied by the 1 job, that is $80. So the total MOH to allocate to this job is going to be equal to $4,088. Let's just change this all to dollars. All right. What is the total cost of job 622 when the company uses activity-based costing? Well, we have it right here. We're going to add in the MOH we're going to allocate, 4,088. I also need the departmental rates from the last spreadsheet, so let's grab that. All right. We now have all the costs under the 3 different methods of allocating manufacturing overhead. With the one predetermined rate, we allocate manufacturing overhead of $7,410, and the total cost is $47,290. With departmental rates, we have $5,963 of manufacturing overhead allocated, so the total cost is $45,843. With ABC rates, we allocate $4,088, and our total is $43,968. That's the 3 methods. Did the use of one predetermined overhead rate cause over or under costing? We already agreed it was overcosting, and we see that it's still overcosting even when we compare it to ABC rates. Did the use of the departmental rates cause over or undercosting? In this case, it still caused overcosting. We ended up with a total cost of $45,000 because we allocated $5,963. Under ABC, we only allocated $4,088. Which method of allocating manufacturing overhead costs reduced the total MOH incurred? This is such a good question for an exam. None of them. We still were allocating a total of $800,000. All we are doing is changing how we allocate MOH, not the total MOH allocated. By the end of the year, the total MOH allocated under all three of these methods will come close to $800,000. All we're doing is changing how we allocate MOH, not the total MOH allocated. There is no savings under ABC. There is no savings under the departmental rates. All that's happening is we're changing how we allocate, not the total allocated. So the answer is here, which method reduces total MOH incurred? None of them. Which cost is a better estimate of the total cost of job 622? Well, we believe the better estimate is the ABC rates. Why? Because we're looking at each activity and how much each job consumes of the resources in that activity. So because ABC reflects the use of resources, we believe that the allocation method is better and it results in better costing of the product or service. So why use activity-based costing? ABC is thought to be more accurate because it takes into account two things: the specific resources that each product actually uses in the production process and the extent that the production of the product uses those resources. What does that mean? Not only does it focus on what resources each product uses, but exactly how much of that resource they use. That's the beauty of activity-based costing. It looks at actual usage of resources. The steps in activity-based costing are very similar to those used in departmental rates and the one predetermined manufacturing overhead rate. Step 1 is to identify activities and estimate indirect costs by activity cost pool, meaning we have to split the total MOH into activity cost pools. Step 2 is to determine a cost driver for each activity and determine the estimated total level for each driver. So pick the cost drivers for each activity and then the total estimated driver. 3. Calculate the activity cost allocation rate for each activity. And 4 is to allocate costs to individual jobs using the activity MOH rates. Can we apply ABC in a service organization? And the answer is absolutely. It is just as useful as in a manufacturing environment. The textbook gives an example of a dentist. The key is determining the activity pools, which in the example are dentist time, hygienist time, tech time, clerical time, and facilities maintenance. Each activity has their own cost driver, as seen here. Each activity would be allocated part of the total indirect costs incurred by the company, as seen here. We have the cost drivers for each activity, so we estimate the total amount of each activity to calculate an activity pool rate. Remember, we're doing this for every activity. We then use the activity rate for each activity, multiply it by the actual for each job to calculate the total cost of each job. We can apply ABC to any organization, including service industries. So, how do we set up activity cost pools? Because that's what we have to start with, right? Most companies have, quite literally, hundreds of activities, but in order to be able to manage activity-based costing, we have to keep the system simple. Managers setting up an ABC system use the cost hierarchy to understand the nature of each activity cost pool and what drives it. meaning what the cost driver might be. There are 4 categories: unit level activities, batch level activities, product level activities, and facility level activities. Let's look at each one. Unit level activities are activities and costs incurred for every unit of product that we make. Examples include inspecting and packaging each product that the company produces. Batch level activities are activities and costs that are incurred for each batch, regardless of the number of units in the batch. One example would be machine setup. Once the machines are set up for the production run, the company could produce a batch of 1 or 10 or 1,000 or 1,000,000, but the company incurs the machine setup cost only once for the entire batch. Then we have product level activities. These are activities and costs incurred for a particular product, regardless of the number of units or batches that was in the production of the product. Examples include the cost of research, development, and the design of a new product. And then we have facility level activities. These are activities and costs incurred no matter how many units, batches, or products are produced in a factory. Examples would be the factory upkeep, the cost of depreciation, insurance, property taxes, and maintenance on the entire production facility. By considering how the costs of different activities are consumed at the unit, batch, product, or facility level, managers are able to run a simple but accurate ABC system. For example, let's say they identify 1,000 different activities. Managers can combine activities that behave the same way. For example, all batch level activities would be combined into one cost pool. This can then result in, let's say, 15 cost pools from the original 1,000. Let's test your understanding of what category of the cost hierarchy different activities go into. Remember, it's either unit, batch, product, or facility level. Each container is cut from the mold once the plastic has been cooled and hardened. This is a unit level activity since we have to do it for each container. Patents are obtained for each new type of container mold. This is a product level activity since the patent applies to every single container produced. Plastic resins are used as the main direct material for the containers. Each container uses plastic resin, so this is a unit level activity. A plant manager oversees the entire manufacturing operation. The plant manager oversees all production of all products, so this is a facility level activity. The sales force incurs travel expenses to attend various trade shows throughout the country to market the containers. They're marketing every single container, so this is a facility level activity. Each container product line has a product line manager. I said the word product, this is a product level activity. The extrusion machine is calibrated for each batch of containers made. I said the word batch, this is a batch level activity. Each type of container has its own unique molds. This is a product level activity because each type of container, each different product has their own mold, no matter how many are produced. Routine maintenance is performed on the extrusion machines. This is facility level activity because no matter how many units, batches, or products are produced in the plant, we still have to perform maintenance on all of the machines. Rent is paid for the building that houses the manufacturing processes. Again, this is facility level activity. No matter how many units, batches, or products, we pay the rent. Not all organizations adopt activity-based costing because it has its limitations and there are impediments to adoption. Adopting ABC can be challenging because its implementation is a huge investment in time and money. Companies need to look at all activities, determine the activity pools, find the cost drivers, and then build the system to capture that data. Even after implementing an ABC system, it is more expensive to operate since every activity and driver must be tracked. If there are any changes to the production process, you have to re-engineer the ABC system. And we can't use ABC for financial reporting, so that means two separate cost systems have to be in place. There is definitely a cost-benefit trade-off in adopting ABC, and organizations have to consider that carefully before they begin the process of implementing an activity-based costing system. Moving on to Learning Objective 3, understand the benefits and limitations of activity-based costing and the activity-based management system. What is activity-based management, or ABM? Activity-based management is an approach to managing a company's activities in order to eliminate waste, delays, defects, and any non-value added activities. The focus is on making decisions that increase profits while keeping your customers happy. ABM is divided into three areas: pricing and product mix decisions, cutting costs, and planning control decisions. Let's look at each one. When we use one predetermined manufacturing overhead rate to allocate overhead costs, we tend to undercost low volume products. When we do that, we set their price too low. When ABC is implemented, the unit cost of low volume products goes up, and we can then appropriately price them. Using one predetermined manufacturing overhead rate also leads to overcosting a high volume product, meaning we set high volume product prices too high. When ABC is implemented, it results in a high volume product cost, which is lower. That means we can reduce their price and increase sales. Under ABC, the price of each product, low and high volume, are more accurate. Why? Because the cost is more accurate. Knowing the appropriate cost means companies can more aggressively market their high profit products, and they can shift the product mix away from less profitable products. What about cutting costs? Companies may implement ABC to get better product costing information, which leads to better pricing and better product mix decisions, but they are often able to use ABC to pinpoint opportunities to cut costs. They can analyze each activity and determine which activities add value and which are non-value added. Called value engineering, the focus is to eliminate waste by making the company's processes as effective and efficient as possible. That means eliminating, reducing, or simplifying all non-value added activities and examining whether value added activities could be improved. Finally, we have planning and control decisions. Activity-based budgeting uses the cost of activities to create budgets. Managers can compare the actual activity cost to the budgeted activity cost to determine how well they are achieving their goals. Remember, activity-based costing can be used not just in manufacturing. Managers can use the data generated by ABC to determine which products or services to emphasize, to set prices, to cut costs, and to make other routine planning and control decisions. So, when does the benefit of adopting ABC or ABM exceed the costs? When companies are in a highly competitive industry and ABC would provide better product costing information, leading to better pricing. When the cost savings obtained from ABC results in a higher profit for the organization. When the organization produces complex products involving many activities. When indirect costs make up a large percentage of the total cost of the product or service. And when the organization produces both high and low volumes of different products. Remember that there are costs to adopting activity-based costing or activity-based management. The costs are lower when the organization has expertise in accounting and information system development and the technology is available already. Companies who have adopted ABC or ABM systems say it's worth the cost, but it does not cure all ills. What it does do is provide managers with a better understanding of the costs of a product or service. Let's look at Learning Objective 4, Describe Lean Operations, and Learning Objective 5, Describe and Use the Costs of Quality Framework together. What are lean operations? Lean operations focus on eliminating waste and empowering employees so as to increase economic benefits to the organization. Lean and green operations focus on getting rid of waste and empowering employees not only to increase economic profits, but also to preserve the planet and improve the lives of all the people that are touched by the company. While lean practices tend to focus on internal waste, green practices also consider the external waste that can happen because of the product. To become greener, a lean company should be aware of all the waste that can harm the planet. Packaging waste, water waste, energy waste, emission waste, not only from the manufacturing process, but also from consumers using and eventually disposing of the product. Organizations that follow lean operations talk about 8 wastes that make up the wastes found in traditional organizations, including service and merchandising companies. These wastes are easy to remember using the acronym downtime. If a company can eliminate defects in their products, eliminate overproduction, meaning making more products than needed or making them at the wrong time, and wait time when their employees are waiting for the parts or materials or the information, then they will eliminate waste. In addition, if companies can ensure they utilize the skills of their employees appropriately, ensure the movement of parts inventory and paperwork is reduced, ensure their inventory is available just in time, reduce excess employee movement like bending, reaching, turning, walking, and finally, reduce excess processing by eliminating features of a product that the customer doesn't want or use, then they will have eliminated the waste embedded in a traditional manufacturing operation. One primary goal of lean organizations is to eliminate the waste of holding large inventories. Lean companies often adopt just-in-time (JIT) inventory philosophy. JIT inventory focuses on purchasing raw materials just in time for production and then completing finished goods just in time for delivery to customers. This eliminates the waste of storing and unstoring raw materials and finished goods. Most companies that adopt lean operations have several common characteristics that help minimize the amount of inventory that is kept on hand, but it still allows the company to quickly meet customer demand. Value stream mapping for each product or service is used to identify and actually visually see the flow of materials and information for each product or service's value stream, all the way from the order to the delivery. The current state VSM, short form, value stream mapping. So the current state VSM is used to show the sequence of activities, communication of information, time going by, and the buildup of inventory that is currently happening. After we can look at these existing current state VSMs, we can identify the waste in the current map, prepare a future map where we remove the waste, and then use it as a goal for process improvement. One of the first changes is usually moving to self-contained production cells to remove the waste of time, transportation, and movement that happens due to a poor factory layout. These self-contained production cells minimize the time and cost involved in physically moving parts across the factory to other departments. To combat the waste of not utilizing people to their full potential, lean companies focus on employee empowerment. Employees typically hold broader roles, which involve cross-training. That boosts morale, lowers costs, and creates a more flexible and nimble workforce. Lean companies also empower employees by using small teams to identify waste and develop solutions. They train employees on continuous improvement. Lean companies use a workplace organization system called 5S to keep their work cells clean and organized. The mantra of 5S is a place for everything and everything in its place. By having a clean, well-organized, ergonomic workplace, each employee within the cell knows where to find the tools and supplies that they need to do each job as efficiently as possible. Lean organizations attempt to smooth the flow of production through the factory so that the rate of production is the same as the rate of demand. This reduces the waste of overproduction, waiting, and inventory. The goal is to make only as many units as is needed by the next customer, whether that be the next machine operator in the factory or the final external customer. In a traditional production system, batches of products are pushed through production according to demand. But in a lean production system, no products are made until a customer's order has been received. The customer's order triggers the start of the production process, and it pulls the batch through production. Because products are not started until a customer order is received, lean companies must focus on reducing their manufacturing cycle time, the time between the start of production and its completion. Manufacturing cycle time is highly dependent on batch size. Large batch sizes cause wait times because each of the units in the batch spends the bulk of the manufacturing cycle actually waiting for the next step in the process. Therefore, one of the key elements of lean production is to use small batches because that reduces the wait time for each of the items in the batch. Another key element is the reduction of setup times, which is a wasted time since nothing is being produced. Reducing setup times means that scheduling can be more flexible to meet customer orders. In lean manufacturing, we have point-of-use storage. In a point-of-use storage system, tools, materials, and equipment are stored close to where they will be used most frequently. Similarly, items that are used infrequently are removed from the cells and stored somewhere else. Lean companies focus on producing their products right the first time, every time. Why? Because defects can slow or shut down production. They don't want to waste time reworking faulty products. Lean companies emphasize building in quality rather than relying on a final inspection point to catch defects. Let's check your understanding of lean operations. Which of the following would you expect to see in a company that follows lean operations? 1. Large inventories. 2. Smaller batch sizes. 3. More organized workstations. 4. Longer setup times. 5. Lower level small team problem solving. 6. Centralized storage of supplies. 7. Pull system. We would expect to see 2, 3, 5, and 7. Small batch sizes, more organized workstations, lower level small team problem solving, and a pull system. Let's move on to our last learning objective, 6. Analyze activity cost pools and cost drivers using data analytic tools. Regardless of whether managers decide to allocate manufacturing overhead using departmental overhead rates or ABC, they'll need to select the correct allocation base, the correct cost driver for each cost pool. But how do they select one? Managers need to consider 1. What's driving the costs in the cost pool? And 2. How easy is it to collect the data from the cost driver? How easy is it to measure and track? If the data is easy to collect for a number of different cost drivers, how do managers decide on which driver to use? This is where data analytics comes in. Managers can use data analytic tools to determine which potential allocation base, cost driver, is most highly related or correlated to the activity cost pool. Correlation is a statistical measure that tells managers the strength and direction of the relationship between two variables. In other words, correlation examines the extent to which two variables fluctuate together and whether they fluctuate in the same or different directions. Finding correlation between two variables is fairly simple with an Excel function called correl. It'll help managers to determine which cost driver has the strongest relationship with the cost pool. The correlation coefficient, which is often denoted as R, indicates the degree of correlation between two variables. Its value can range from -1 to 1. A negative value means the variables move in opposite direction, whereas a positive value means the variables move in the same direction. The stronger the correlation or relationship, the closer the R value is to 1. If the variables don't move together, the R value will be closer to 0. Managers should choose the cost driver that has a positive result as close to 1 as possible. Let's move to Excel to show you the correl function. We're going to complete E7-29A, Analyze Activity Cost Pools and Cost Drivers using Data Analytics Tools. The Toll House Equipment Company manufactures lathes, rotors, saws, and other woodworking equipment. The company's controller imported its weekly manufacturing data from the past year into Excel. The data includes material handling costs, number of parts moved, weight of parts, and volume of parts required. Use the correlation function in your spreadsheet, for example Excel, to determine which variable would be the best allocation base for the company's material handling costs. Rank the 4 variables from the most highly correlated with materials handling costs to the least correlated. Which variable would you recommend be used as the allocation base for material handling costs? Let's look at the data. So we have a column with the weeks, material handling costs, which is the dependent variable, and then we have all these independent variables: number of parts moved, weight of parts in pounds, volume of parts in pallets, and the time spent in hours. So now we want to determine where we want this correlation coefficient to land once we've done the calculation. So I want a correlation coefficient for the number of parts moved, the weight of the parts in pounds, the volume of the parts in pallets, and the time spent in hours. I'm going to land on this cell for that first correlation coefficient. Now, up in the ribbon, I'm going to choose formulas. Here it is, formulas, right up here, formulas. And I want more functions. I want statistical. And then I'm going to go down until I find correl, and it's right here. So I click on correl. It's asking me for array 1, and the first array is always going to be the dependent variable, in this case, material handling costs. So I click on the little up arrow and I highlight the material handling costs without the label. I've chosen my range. I'm going to hit enter. Now, array 2 is the independent variable. Click on the upward arrow, and I'm doing number of parts moved. So I start at the first cell that has the number of parts moved, not the label. Go all the way down. Once I have my range, I hit enter. And then I hit OK. And there is the correlation coefficient. Remember, the correlation coefficient indicates the degree of correlation between the two variables, the correlation between the number of parts moved and the material handling costs. Let's do the weight of the parts. Again, I'm going to go into formulas, more functions, go down statistics and correl, and I'm going to again choose the material handling costs, hit enter, choose my next driver, which in this case is the weight of the parts, hit enter, and hit enter. And I see that the correlation coefficient for the weight of the parts is lower than the correlation coefficient for the number of parts moved. Number of parts moved is 0.60. Weight of the parts is 0.54. The closer it is to 1, the greater the correlation. Let's move on to the volume of parts. And there we go, 0.65. So the correlation with the volume of parts is higher than the weight of the parts and the number of parts. Finally, we have time spent. Now, you can simply go up into the formula bar and you could hit equal and then notice it's going to give me Corel. And then I can decide on the array 1 and the array 2. So I can choose the array 1, which is highlighted right now. So I'm going to do that. Comma. And now I'm in array 2. So I'm going to do that time spent. There we go. And I hit enter. And I see, let's just focus in on this. I see that for time spent, the correlation coefficient is only 0.18, which is like terrible, right? So let's go back to the question. It said, which variable would you recommend be used as the allocation base for material handling costs? And we know we want the one that correlates the most. So we see that this is the volume of parts. Now let's think for a minute. We have done regression analysis in the past. How does regression analysis tie in to the correlation coefficient? Let's just look at that. I'm going to go up to data and I'm going to do data analysis. I'm going to go down to regression and I'm going to say okay. And I'm going to choose the Y range, which is the dependent variable. So that's my material handling costs. I'm also going to choose the X. Remember, I am looking, let's just go up for a second. I am trying to see the relationship between the volume of parts. So I want that volume of parts. So I'm going to click on here and I'm going to take the volume of parts. There we go. And I want this in a new worksheet, so I'm simply, and I've got no label, so I'm going to simply say okay. Here's the output for my regression analysis. Look at the multiple R. It's 0.6512003. 0.6512003 with additional decimal places. So the correlation coefficient is actually shown in the regression analysis. I'm going to make this a little bit bigger. Look at that. So what is multiple R then? Multiple R is the correlation coefficient. R squared is the multiple R squared. So instead of doing regression analysis, I can simply choose to do the correlation coefficient instead. It's a lot easier, a lot faster. Now, it doesn't give me my cost function like regression does. I've got the intercept right here and I've got the X right here. So it doesn't give me this, but it does tell me immediately if there is a relationship between the dependent variable, material handling cost, and my choice of independent variable. And it is an excellent way to decide on which cost driver we should use when we use activity-based costing. Let's do a quick check of your understanding of the concepts in this chapter. 1. Which of the following would indicate that a company should consider using departmental overhead rates rather than a single plant-wide overhead rate? A. Each product is in each department for a different length of time. B. Each department spends different amounts on manufacturing overhead. C. Each department incurs different types of manufacturing overhead. And D. All of the above statements are true. And the answer is D. All of the above statements are true. 2. Manufacturing overhead is allocated to jobs in an ABC system by using the following formula. A. Activity cost allocation rate multiplied by the estimated amount of activity allocation base used by the job. B. Activity cost allocation rate divided by the estimated amount of the activity allocation base used by the job. C. Activity cost allocation rate multiplied by the actual amount of activity allocation base used by the job. And D. Activity cost allocation rate divided by the actual amount of activity allocation base used by the job. And the answer is C, activity cost allocation rate multiplied by the actual amount of activity allocation base used by the job. 3. The legal costs associated with filing a patent for a new model of oven at an appliance manufacturer is an example of which type of activity? A, unit level, B, batch level, C, product level, D, facility level. And the answer is product level, C. 4. Which of the following is false? A, ABC focuses on allocating indirect costs. B, advances in information technology have made it feasible for more companies to adopt ABC. C, ABC is only for manufacturing firms. And D, a system that uses ABC is more refined than one that uses departmental overhead rates. And the answer is C, ABC is only for manufacturing firms. No, we know that this is for services and for government organization. 5. Which of the following is not a good reason for a computer company to use ABC? A, the computer industry is highly competitive. B, most costs are direct. Indirect costs are a small proportion of total costs. C, the company produces many more desktop than tablets, and tablets are more difficult to assemble. And D, the company has advanced information technology, including bar-coded materials. And the answer is B, most costs are direct. Indirect costs are a small proportion of total costs. If that's true, then it's not a good reason for a computer company to use ABC. That's it for Chapter 7, Activity-Based Costing.